Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending August 19, 2022. Looking at the indexes for the week, the TSX and Dow Jones were flat, the S&P 500, Nasdaq, and Russell 2000 were down, gold was down, and oil was largely unchanged. On Tuesday, August the 16th, Canada reported its consumer price index for the year-over-year for July with a 7.6% CPI, down from 8.1 for the year ending in June. That was the good news, but it was mostly because gasoline and groceries went down, while core CPI had stayed the same. Bank of Canada said there would be more work to be done, indicating more interest raises. The bond markets are pricing in a high likelihood of a 0.75% rate hike in September. The Canadian 2-year and 10-year yield curves for the Canadian government bonds have inverted, which affects the economy because banks are making less money lending money, so they are affected and will lend less, also hurting the economy. This is why the inverted yield curve sometimes predicts a recession in Canada. There may be one historically in the next 6 months to 4 years, however. Turning to the U.S., more U.S. members of Congress have visited Taiwan, further annoying China. Segueing to China, China's economy is slowing and it is getting some numbers lower than expected, and they cut their interest rates 0.1%, a gesture to be sure, and they may need to do more, such as fiscal spending. The housing market is down in China and will be a headwind for the Chinese economy, as each percent drop in the market causes a 1% drop in the GDP. There are many properties built and held by investment companies which are highly levered and expect the properties to go up in value, and they are not going up in value. Lockdowns are still continuing, causing retail sales to be lower. Oil is weakening too because of China's slowdown. Here are China's July numbers. The GDP grew by 0.4% year over year, which is far too low. China needs 5% growth to do what it needs to do. Most of the low returns are caused by COVID lockdowns, and there has been a definite downtrend in the Chinese GDP since 2021. Looking at retail sales in China, they grew by 2.7%, but again 5% was expected. Industrial production jumped by 3.8%, but 4.6% was expected. And real estate fell at a faster pace than in June. China's numbers were below expectations across the board, signaling that its real estate slump and pandemic lockdowns hurt economic growth. Looking at unemployment, overall the unemployment rate sank to 5.4% in July, but the rate among young people is still skyrocketing. The unemployment rate among 16 to 24-year-olds was 19.9%, the highest since 2018. On the positive side, US and China agreed to begin trade talks in the fall, hopefully leading to some removal of sanctions. As US and Canadian inflation comes down and employment remains strong, the odds of a quote-unquote soft landing become better. A soft landing is where inflation comes down and there is no significant recession. For September, experts are thinking a 0.5% or possibly 0.75% rate hike. The inflation is still enemy number one. Note that the US household debt is 78% of US GDP, while Canadian is 106% of the Canadian GDP. The Canadian existing housing dropped 1.7% in price in July. There have been 4 months of declines. The US weekly jobless claims dropped to 250,000, showing the strong job market persists. Looking at the UK, they had over 10% inflation for the year-over-year for July. This past week, Home Depot and Walmart both had good earnings and reports for their Q2 numbers. All retailers have some inventory overhang to deal with, however. Looking at next week, we have earnings. On Monday, it is Palo Alto Networks. Tuesday is Bank of Nova Scotia. Wednesday is NVIDIA, RBC, National Bank. Thursday is Toronto Dominion, CIBC, and Friday is the Canadian Western Bank. No dividend increases are expected from the banks, and the share buybacks may be slowed. Next week's economic events, well, we have Jackson Hole in the US, which is an economic meeting with the Fed Council members and company CEOs speaking. On Wednesday, we will have information releases for US oil inventories, and Thursday will be the US GDP. That concludes my look for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.